I view Bitcoin as actually being insurance on the fiat markets, and you should want to own insurance on the fiat markets, much like you own fire insurance on your house. I don't want the fiat markets to break. I don't want my house to burn down, but I own insurance on both of them because I'm concerned with things like the debt spiral in the fiat system, and the treasury, the US treasury, is going to have interest expense obligations that are going to surpass military spending this year. It's to pay back their outstanding loan obligations. Well, if that is the case, you want to own hard money. And the hardest form of money is Bitcoin.
The early 2023 rally in the Grayscale Bitcoin Trust has outpaced that of its underlying Bitcoin holdings. As a result, its discount on net asset value and AV is significantly reduced. The closed-end trust, which manages more than $10 billion in assets, is up 17.5% this year, compared to a 5% rise in the price of Bitcoin to its current level of $17,300, which has reduced the GBTC discount to around 38%. The narrowest in 8 weeks after closing out 2022 at a 45% discount. In December, the discount reached a new high of 50%. According to Greg Foss, the digital currency group, DCG, owns 67 million GBTC shares, which is 10 times more than the next largest holder. If you want to know Greg Foss's thoughts, just keep on watching here at Market Empire.
Firstly, so DCG Group is the largest holder of GBTC shares. I think they own 67 million GBTC shares, and the next largest holder is Cathie Wood with something like 7 million. Okay, so DCG owns 10 times the volume of GBTC shares. Most of those were accumulated, I'm told, due to the 3 Arrows capital selling and other hedge fund blowups that were trying to trade the discount to net asset value. And when that blew up, when they blew up, they had to sell their assets. So DCG owns 67 million shares of a trust, GBTC, that trades 4 million shares a day. Whoa. So that's an awful lot of supply. Now, you could argue, are they going to be a forced seller? Or what's another scenario that could happen? They could sell their trust to another fund manager. Right. Fidelity would be phenomenal as far as I'm concerned. But in doing that, they give up all the fees that is very profitable. GBTC has a 2% management fee. So 2% on the net asset value, not on the actual trading value. So that's like 2% times $10 billion. That's a nice little ticket that if you need free cash flow. In the case of DCG, that's why they wouldn't want to have to sell their trust to another fund manager. But all of these things are potential outcomes. I just will say, you don't hire Moelis, which is the investment bank that DCG hired, without considering Chapter 11, because Moelis is a restructuring, they're professional restructures. They are not like hiring Goldman Sachs for strategic alternatives. They're hiring you because they're considering, filing for bankruptcy protection. All of this is news that's in the market already, Paul. This is not a surprise. This is why potentially the market is adjusting to these this information over time. And I will say this: one of the biggest trades that people have to have on is they are long GBTC and short BITO or Bitcoin futures against it, and playing the potential arbitrage or compression, price compression. All of these things could mean hedged and wedged. Okay, when you're hedged and wedged, what typically happens is your short position goes up in value and your long position, you're struggling to defend it. Well, one of the reasons that BITO might be rallying here and Bitcoin, physical Bitcoin versus GBTC, is that everyone's short that stuff versus being long GBTC. In the context, though, of a global market, $10 billion, the valuation of GBTC, again, is a rounding error. It's not that much. And there could be, and I've said this, props not on your show, if I was the Canadian Pension Plan Investment Board and I knew I needed to get 1% of my assets into Bitcoin, I needed to own $10 billion of Bitcoin, that's 1%.
Yeah.
Man, oh man, wouldn't it be great to buy it at a 45% discount if you could do it all without any friction and then unwind the trust yourself? I'd be interested in that. I don't have $10 billion, but I do know there are some fund managers out there that need to own 1% Bitcoin. This would be a cool way of doing it. In the digital asset space, nothing surprises me. You can't always use a traditional finance playbook in the digital asset space because firstly, there's a lot of inexperienced CEOs in the digital asset space that don't understand the process of traditional finance restructurings and bankruptcy. And then secondly, there's so many people out there that just don't take at face value what someone like Sam Bankman-Fried claims, rightly so. So, there's the person right now that holds the cards is Barry Silbert over Gemini. And he doesn't have to give up those cards in the event of a restructuring. He still holds those cards. So I don't anticipate it. But again, look, I'm not commenting on this from, I'm not behind the wall. Well, if I was, I couldn't comment on it. But even if I was studying this situation closely, don't take my word for it. You cannot use a traditional finance playbook within the digital asset space. It just, again, is too young. It's too many different players that don't understand the system. So better for me to say, even though I have commented, how about, Paul, no comment, because I actually have no idea. A regulation and clarity on regulation would be a huge positive for the digital asset space and Bitcoin for me in particular.
Sure.
A lot of big money players need to have exposure to Bitcoin. I'm going to point out that BlackRock just announced an allocation to Bitcoin within their global asset fund, right? So a huge fund that now has a sleeve where they can invest in Bitcoin. It is only Bitcoin futures, but it doesn't matter. It's got exposure to the asset class. As regulatory clarity emerges, I think you'll see more large investment managers have the desire to allocate to the Bitcoin asset class. Why? Well, because there are arguments that it is a diversifier. So the correlations are different to other assets. But from my perspective, having spent my whole life in bonds and the fiat markets, I view Bitcoin as actually being insurance on the fiat markets. And you should want to own insurance on the fiat markets, much like you own fire insurance on your house. I don't want the fiat markets to break. I don't want my house to burn down, but I own insurance on both of them because I'm concerned with things like the debt spiral in the fiat system, and the treasury, the US Treasury, is going to have interest expense obligations that are going to surpass military spending this year. It's to pay back their outstanding loan obligations. Well, if that is the case, you want to own hard money. And the hardest form of money is Bitcoin. But I'm not saying don't own gold, because I own gold as well. And I own silver, I own other hard assets. This is why I don't say you have to be 100% in Bitcoin. All I do know is you should take your allocation to Bitcoin, not from your gold allocation, before you take your allocation to Bitcoin from your fixed income allocation. So there's the low-hanging fruit, in my opinion. And you mentioned low-hanging fruit regulatory. Yeah, when that clears up, you will have diversified asset managers that might say it's no longer 60-40, it's 60-20-20, and the 20% new is called alternative assets, of which a sleeve is 5% digital assets, because that's the only way you're going to keep up with the fiat debasement. And that's the mathematics I like to bring to the table, Paul. It's grade 11 math. Fiat's debase. It's 100% certain that fiat will debase. You need protection against that. The best protection, in my opinion, is Bitcoin. That being said, I don't have all my hard asset money in Bitcoin. I have it spread amongst other hard assets as well.
According to Foss, there will come a time when Bitcoin and other fiat currencies will coexist as global transaction standards. What are your thoughts on this assertion? Is it even possible? Leave a comment with your ideas below, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.